Hello, everyone, and welcome back to the Pullback Edge. It's the end of another trading week, and it's time to see how the ASX has performed. In this video, we will break down the weekly movements, highlight the key trends, and point out what's worth keeping on our watch list. Before we proceed, important for the disclaimer. Friends, the content on this channel is for educational and informational purposes only. Just want to be very clear on that. I am not a financial advisor. This does not constitute any financial advice or investment advice or any recommendation to buy or sell any financial instrument. You are responsible for your own trading decisions. Trading and investing involve risk. So, with that out of the way, we will proceed with our presentation. So here is the process that we will follow. We will use the ASX 200 index, the XJO, which comprises the top 200 market cap companies on the Australian Australian exchange, as our benchmark and compare the key indices against it. Our starting point will be the 1st of December 2025, which we will keep fixed for the week by week comparisons. So we have a consistent comparative analysis going forward. The indices we are tracking are the XKO, which is the ASX 300 index, XSO, the small ordinaries index. Then we have the materials 200, resources 200, all ordinaries gold, financials, banks, A REITs, which is the real estate sector, the healthcare sector, and the all technologies. So let's lift the curtain on this week's performance. Friends, as you can see, materials and resources have been the clear leaders for the week ending the 9th of January 2026, followed closely by gold, which is at 6.83 compared to the materials, which was the top at 10.22. Now, this 10.22 percentage is a comparative performance of materials against XGO, which is at 1.2%. So the absolute performance for XMJ, which is the material sector since the 1st of December, would be 10.22 plus 1.2. That's around 11.4% for XMJ. Now we can see it followed by gold. Now the top three, they clearly reflect the strong commodity trends that we had in this period, which was supported by the high prices that we saw in gold, as well as in the other commodities like copper, lithium, platinum, etc. Now, banks and the broader financial sector, which is the XFJ and the XBK, they have barely moved since the 1st of December, just at 2.19 and 2.09, just a little bit not above the XJO. While the healthcare and the technologies, they have been the dogs of the indexes, they are sitting right at the bottom. But, but will they stay there? No, that's where it gets interesting. So let's dive deeper into the numbers and see what the trends are really telling us. So we'll look at some of the indices a little bit more in detail. Let's focus on first on the green line, which is for the gold, which has been an outperformer in the top three. Let's see what we can derive, what more information can we derive from here. So for gold, we see a lower low that it made on the 4th of December, then a lower high, which was negative. Then if I draw a straight line from here, it crossed that line, but immediately it crossed above that, which was a big, and not only above that, it also crossed above this recent high as well. So if I just take these points and draw my trend line, I can see that the gold has been either been close to this trend line for all this period. It made like a recent high on the 24th of December, but since then it crossed after the 31st of December, on the 2nd of January, it has crossed below this trend line, and it's not crossed above this recent high and this low that it has made. So just imagine that this is just a box. If I just create one rectangle here, we can see this being the center, or this being the low. It's below the 50% mark of this range as well, uh, which is not a good sign for gold, which means that it is losing momentum. And as long as it stays within this range, that would be the momentum would be getting lost. But if it crosses below this line, then it would be negative for gold, which means it would be positive for the equities. So, looking forward to that, what happens next week. And now, if I do the similar kind of analysis on the bottom, I'll just pick up uh, the uh, healthcare as one of the line, which is this purple line that we have. I pick up these 2 points. I can see that the healthcare had been below this trend line for a long time, but just recently it has crossed above this trend line. And now, as long as it stays above this trend line, I can say that the momentum is building up. It's not completely like a long position here right now, but I can see that definitely it is above this recent high. So it definitely is in a higher high state. All that we have to see is that it does not make a lower low again. So if it makes a low, it higher low above this recent low here, and then it crosses above this, then we definitely would be very much positive for healthcare. So what we'll do is we'll go through and we can see this. I'll not go into deep into detail, but the technology also is showing the same signs here as well. But we can see recently, in this period that we are seeing, healthcare is performing or outperforming technology in that sense. So let's look at this a little bit more in detail. I'll go into the charts. I'll ignore or hide the indicators for now. Just look at the pure price action. And what I see here is, if I look closely here, this was the last year in July. We see a pin bar after an upsurge here. We see a pin bar, again a pin bar. It not was not able to cross this high. It tried to make another pin bar very close to this, and this should have been a giveaway. Anyone who had still been holding, because this was a signal which the healthcare index was giving from the 30th of July till the 18th of August. But since then, after this, immediately we can see it just completely lost its momentum. Has been in a complete downtrend. Now we are looking at this as a 1 point recent high that it tried to make. I take that as a second point, and with these two lines made, it's a clear trend line. And now I can see that recently it has crossed this above this trend line. And if it remains above this zone, then definitely it may consolidate for a while. But if it as long as it remains above this zone, healthcare would be sector to look out for in 2026. Now let's add those indicators as well, and let's see what we can infer out from here as well. As you can see, I'm using a default RSI with the red as the moving average on the RSI, and the TSI, which is the true strength index. The true strength index is a indicator available on TradingView community. There have been some modification that I have done for myself for the colors and all, but you can ignore all that. If you use a plain MACD as well, it will not give you any information which the TSI is not giving right now. So if you look at these two indexes, what we can see is, during this time period, let's look at this time period when price was making a lower low. We can see RSI was making a higher low. This is a bullish divergence, a very positive sign for the particular instrument. And if this remains above this trend line, above this region, and if the RSI also does not go below this low, then this would be a very good sign for healthcare index. And on the TSI, we can see as well the TSI the histogram also has turned green, which is a positive sign as well. So now, what do we do now? What do we do with this information? What we do is we know that these are the laggards indexes are showing some green shoots. So what next? What we do is we look for some stocks into that sector. Now, how I would be looking at is I can I can go through all the, these are all the healthcare indexes stocks. I can go through each of those one by one, or there may be some particular ones which I have marked down. I can look at that. Another way that I normally do is I have a screener, and nothing hidden in here. This is a strong financial screener. I'm looking particularly at the revenue growth on a 12-month trailing year-on-year of revenue growth of more than 20%, and particularly the net income growth on a year-on-year basis of more than 20%. So these are the key ones with a return on invested capital as well, more than 10%, and rest of the parameters should be positive. So if I look at this, and this look, this is just a parameter that I am using. These are not the absolute best, but something that I am using. So what it gives me is in the healthcare sector, it gives me just two stocks, Polynovo and ProMedicus. Let's look at ProMedicus into this and what we see out of that. So in ProMedicus, we can see that this is now one thing which we have seen, that this is a strong financials company, is in a sector which has been underperforming the index. The index is now starting to show some green shoots. If that index really gains momentum, then those companies which are strong financially should be the ones which should really be the front runners in that new rally. So from the screen that we got, this was one stock. We can see clearly here, uh, from this high, I've just drawn this trend line, and okay, okay. Now, so we can see that recently it has made, like if I just see this one, it has made, it's a double bottom that we are seeing here. And if I see on the indicators, there definitely will be a positive bullish divergence here. But we see this a low made. Again, this low is being tested here. And when this low is being tested here, there was a huge volume bar that we are seeing, which was almost uh, anything that we have seen since the 19th of September. So this is the highest volume bar since then. This volume bar was higher than what we saw here at this low. So definitely it's a positive momentum. So it's definitely is gaining momentum. And what we see here is that we have an earnings on the 17th of February. And this 17th looks to be coming very close to where this low and this is forming. So not looking too much into it, but looking here, I would be expecting that if the price should not like, if the price remains at this level, hovers around this level, as it comes close to this trend line and to this late, looks like that there's a pause being built. The effect we should be seeing coming close to the earnings, or after that, which once it crosses this trend line, then definitely PME would be in a positive zone. So something to really keep a close watch on, and something which when we meet next week, we would be looking at when we do the comparative analysis of all the indices and all. We'll be looking at this particular stock and the healthcare stock and if we see how that aligns with our analysis. So with that, friends, I'm done for this week. Hope you like the information provided. Hope there's something to take away and learn from this. If there's something which you want to share, any feedback or comment, please do share. And if you found this informative, then please just do like and share this video. Thanks, and see you again next week.